basically hour after hour, day after day, new crazy details and events keep happening. But the short answer is it appears to be massive fraud. I think one thing we can do ahead of time is just say everything is alleged or appears to be, because obviously the lawyers have to go through this, in detail. But obvious scams are obvious now that the documents are out, now that, things are less opaque than they were before. And basically it's like you have this offshore exchange that had inappropriate connections with their trading arm, and were using, appear to be using customer funds to finance their trading, and were using their own token created out of thin air as collateral for loans. And so we appear to have actual fraud, various types of fraud, essentially a Ponzi scheme. And that's different from even just a normal casino, right? I mean, if you can have a crypto casino and it makes money from fees, and most traders get wrecked. But this is like a casino built on top of a Ponzi. So this is like, among the worst of the worst.
Yeah, I can't figure out if this is it's definitely a scam. I can't figure out if it's a scam whereby they set out on purpose to scam and defraud people to personally walk away with a huge amount of money, hide a huge amount of money, or it's a situation that's become a scam because something's got out of control. They've tried to grow a business too quickly. They've tried to use very strange kind of financing methods. And in doing so, they've got themselves into a sticky situation and tried to dig themselves out of it by doing some kind of weird financial engineering. It feels like the latter. I know maybe it doesn't matter. Maybe it's a scam, whatever. But it feels like it's something that got out of control.
Yeah, I certainly don't think they intended to blow up, especially by being so cozy with regulators and politicians and public. A lot of that was clearly like legal defense. And I think the way we can look at it is, because now there's leaked documents of what they kind of pitched to investors. Some of those documents were sketchy, like, earned high returns with no risk, and it's like bolded. And they're explaining why there's virtually no risk for these high returns, which is a giant red flag.
What were they saying? Because were they basing the business on trading fees though?
Yeah, they're basically saying, well, in the beginning it was Alameda.
Yeah.
And they're basically saying that, our trading algorithms are so good and we can make money in both market directions as a market maker. And therefore, if you loan us money at 15% annually, there's almost no risk. That was some of the early documents. Okay. They're now surfacing. So from the beginning, there was red flags. And not all those documents were publicly knowable, right? They were, to VCs and financiers and things like that. And so it started out as that trading arm. And then that was like 2018. And then 2019, they launched FTX, which is the exchange. And it appears that a large purpose of the exchange was essentially to provide low-cost capital to Alameda, which are supposed to be separate entities. But it's clear now that they were, and it was kind of understood all along by a lot of traders and observers that there's some sort of probably uncouth connections between the two. But this, as more details come out, you see how intertwined they appear to be, and how kind of FTX was really almost like a way, like a mechanism to extend Alameda and their trading activities and their leveraging.
So Alameda was the trading arm that existed prior to FTX.
Yes.
Do we know when they were established?
I believe 2018.
2018. And do we know much about their trading record up until that point? They were generally held in high regard, or do we now have suspicions that it was never making any money?
I mean, I assume they probably were making money, but it's now unclear. I mean, if you can't trust the books, then it becomes kind of speculation. And of course, there are people that might have followed they made it their whole thing, almost like private investigators to follow exactly. But I think from early on, they had some sophisticated trading that can work temporarily. But, especially once you start printing your own token and then leveraging that token, you start building a more and more fragile Ponzi. So I think it very much got out of hand, but there were red flags in those documents from the beginning, at least for those who had the access to see those documents, which were not very public documents.
Right. I think Alameda started as a market maker and then became directional at some point in like 2021, and from what I can see.
But market makers make money whatever
That's meant
direction.
To be completely neutral, yeah.
Yeah, completely neutral. So you may just make a very small part on every trade.
Mm-hmm.
But you still have to manage your risk appropriately, because you can get caught off with a one-sided position if things change rapidly. You take near-term, sometimes one-directional bets while you're making those markets, even if you're not structurally trying to make a long-term bet.
And the rumor is what, the 8 billion hole?
It's more than that now. So in their
Okay.
bankruptcy document, I think it's they tick the box between 10 and 50.
For Alameda or FTX?
They're all wound up together. Am I right in that, Lyn? Are they all wound up together?
It keeps changing, but yes, multiple entities have now filed bankruptcy.
I think it's like 132 entities or something.
Yeah, including FTX US, which was again supposed to be separate and regulated differently. During this, as this was playing out in many now deleted tweets, first they're saying funds are safe, and then they were kind of admitting that funds were not safe. They were like, well, FTX is still safe, but then even FTX US is doing bankruptcy. So, kind of across entities, it's all intertwined. And there's actually shots of their organizational chart, and it's an absolute mess if you look at it. It's
you find it?
I'll have a
it's
look,
almost purposely obfuscated the way it looks.
So do we know what the chain of events are that what the speculation is on the chain of events that led to the collapse? Because the collapse was the speed of the collapse from something that was 2 weeks ago, maybe we had no idea. Maybe there was some suspicions, but valued at $32 billion, FTX.
Is this it?
Yeah, there's the organizational
I mean,
chart.
I don't even know how you look at that.
Yeah, well, actually, okay.
Imagine keeping track of that,
That looks, do you know what that reminds me of? That reminds me of Vitalik's Ethereum roadmap.
more or less.
Yeah. So hold on, what are all these fucking companies?
He had exposure to over 100 companies.
Westphal,
Various
Alameda
investments.
Research, North Wireless Dimension. What the hell? Alameda Research Cake. I mean, I can't even read most of it. I kind of want to. Yeah, I can't read that, Danny.
it's
I
too
want to
much.
get dug in. I want to dig into that and find out what it is. But why have they got that many companies?
I think there was a lot of they had to domicile in lots of different locations and that kind of stuff. So a lot of them were sort of like Alameda US, Alameda wherever else. But I don't know the answer to why.
They also apparently did a lot of venture stuff, right? And
Right.
and they're going to find out which one of those are maybe real venture versus which ones are kind of shell companies. I mean, this is all again, it's changing hour by hour. This could, some of this will probably be obsolete by the time this publishes, because that's how fast moving this all
Do a
is.
Twitter search, see what the latest thing in the last hour.
Yeah.
I mean, the last thing I just saw, like I said they've got 0 Bitcoin on the balance sheet, but they got 1.3 billion in liabilities. But they did also
1.4 billion.
1.4 billion in Bitcoin liabilities, which means, what does that compare to Mt. Gox? That's like about 3 times. Was Mt. Gox about 400 million when I think about 400 million. I could be wrong. But I also read there's 16,000 wrapped Bitcoin that now can't be accessed.
Yeah, on Solana, there and also wrapped Ether, I think. But yeah, there's some wrapped entities. The problem, a big challenge with DeFi as it exists now, is that it's very reliant on, ironically, custodial entities. So you have custodial stablecoins, and you have custodial, wrapped Bitcoin, wrapped whatever, and then you'll have these protocols that decentralized exchanges and pseudo decentralized liquidity leveraging providers. But the core of the system is often still these custodial assets. And so if FTX holds the keys to these wrapped, Bitcoin in wrapped around, wrapped by Solana, if they lose the keys, then that's a useless token. And so they're currently trading at a major discount based on the, non-zero chance that among these bankruptcy proceedings, someone will find the keys and it'll be opened. But at the current time, it's a problem.
So I was trying to understand. Did you find that Mt. Gox number?
No, I'm not.
All right.
There's also, I mean, one of the recent news is there's a hack. So someone hacked it,
600 million.
Yeah, I mean, I've seen the number keeps changing. That was the first number I saw. Then someone said over $1 billion, and that, well, it could be all different by,
It's a crazy story.
Yeah.
I saw that and immediately also saw that Sam was on his private jet flying to Argentina. I was like, is he going to Le BitConf?
Well, and then that was countered, and people said, no, we still see him on the Bahamas. And so, again, this could be different. We'll probably know where he is in a couple of days, but I've seen competing rumors on social media, so I wouldn't speculate on that personally. But.
So the weird thing about FTX is I thought they were just a very successful business. I remember when Binance kind of came out of nowhere and very quickly became a huge exchange that almost every trader I know was using it. Traders didn't tend to use Coinbase, and some use Kraken and Gemini. That tend to be more like retail spot buyers. But it felt like FTX came very quickly out the gates, and they were able to spin up new markets very quickly. I've never have you used it?
No,
I've never used it, but I was aware they constantly spun up these new markets, these new futures markets, and it seemed to me like they understood traders, and a lot of people I know used it. So I was like, when I saw that, and then I saw they had like Tom Brady, I was like, okay, this is just a successful business. that is making a lot of money on trading fees. And so I don't understand, because my assumption is they probably were doing quite well to begin with. Probably has some good user sign-up numbers, some good trading numbers, probably some good numbers to raise funds and grow a business. I don't understand where it's gone wrong. Has it gone wrong because they've tried to protect Alameda? Or has it gone wrong because I don't know where it's gone wrong?
It appears to be, yes. They probably try to protect Alameda. That's at least the current evidence I've seen.
Right.
But if we kind of back up to how we got here. So, touching back on the macro for a second, because a lot of these things start with macro. You have rising liquidity environments and you have falling liquidity environments. And most of these, let's say all these, Bitcoin and altcoin booms that happen, because they happen generally at the same time. When you have a rise in liquidity environment, that's where they've all occurred. They've all occurred when money's flowing, money's cheap, risk assets in general are doing well. And then when that rolls over, the economy's slowing, Federal Reserve's tightening, there's various reasons why this can happen. And you have this declining liquidity environment. All these Ponzi's break. And then even Bitcoin takes a price hit as capital goes out and euphoria goes away. And the difference is, Bitcoin's been through 4 of these and it, keeps making higher highs and higher lows, at least so far, and other ones go through 1 or 2 cycles and then they're just, they're dead in Bitcoin terms pretty much forever. That's historically what's happened with thousands of these projects. And so we've, ever since, roughly mid 2021, we've been in a declining liquidity environment. And it really accelerated here in 2022. And so all these speculations, all these risk-on things start pulling out. And then when that gets pressured, you find out who's, to quote Warren Buffett, swimming naked. Who's more levered in an opaque way than maybe market would have thought. And so, for example, there were a bunch of us pointing out Luna and Terra, that intertwined system, as a gigantic vulnerability. And I wrote about that a lot. That was the good thing about that, among the terrible things, is that it was transparent. And so you could be like, no, this is literally, we can map this out. This is a problem. And a bunch of people did. Then you have Celsius, which was well known as being sketchy for a long time. And there are a lot of people kind of calling that out. It's a little bit more opaque, obviously, than something like Luna, but it was pretty well telegraphed. The one that's, so when Luna goes down, all these things fall. Celsius is heavily reliant on their token. That's getting pressured. And then the surprise to a lot of people was 3 Arrows Capital, because that was more opaque. And they were considered smart money. And they went down, and that hurt a lot of lenders. And you had contagion in the whole industry. All this intertwined leverage was more intertwined than people thought, because again, a lot of it's opaque. And then you had, FTX and Alameda come in and provide liquidity to some of these. And I think a lot of people rightly pointed out that, he was positioning it like, oh, I want to save the industry, I want to be altruistic, but really he's intertwined with them too. And so they want to mitigate contagion so it doesn't bring them down. But then the question is, how, people obviously, again, because of opaque balance sheets, you couldn't be sure how deep their pockets are. Are they on the verge of solvency, or are they just, they medium, or are they as deep as they claim, right? And so a lot of people, I think, rightly pointed out that they're probably doing this to save themselves. And so there was this, this kind of lull in the market where you're not making new lows, there's no more blowups, or at least big blowups. And then it was leaked that what their balance sheet looked like. Alameda's balance sheet. I think CoinDesk had a report on that. And what it showed was that a lot of so you have assets and you have liabilities. And of course, the difference between those is your actual equity. And the problem was that a lot of their assets were basically make-believe. There are these illiquid tokens where their own token, the FTX token, they can print billions of it, give themselves most of it, sell a little bit to the market, and have that trade and have a quote unquote trading price that they can probably manipulate on their own exchange to some degree. Sam would post his own buys of his own token every week, almost encouraging retail to keep buying.
It's so obvious in hindsight.
So once that leaked, a lot of people were like, this is a giant red flag. Because not only that, if that equity if they ever had to sell that, they would not be able to, because once you start selling, 100 billion of that, the price is now so crushed. Good luck offloading the other billions. So you don't really have the value that you claim you do. And then they also held other tokens that they didn't control, but they were just, they were fluff, right? They're just fluff. Many of them were down significantly. And so people were like, wait a second, if this is their actual balance sheet, it's like, well, how can you verify it? Do they have another balance sheet? And, so people could still not be 100% sure, but that was basically
Red flag.
a major vulnerability was now pretty clear. And that's when a lot of people started analyzing that a lot more. And then, Binance comes in because they held some of those FTX tokens from
Was it like 400 million, 500 million?
something like 500 million.
Yeah.
How
Yeah.
did they get those tokens? Did
They had previously invested in FTX.
Right.
I think they were one of the very early investors.
Yeah.
So they backed FTX and therefore they
In
had.
exchange for
Yeah.
the token.
Yeah. Okay.
And then so they started selling their tokens with CZ coming out and saying, like just for prudence, we're going to sell these. We don't want to repeat a Luna. Simultaneously adding to selling pressure while also using language to show that you're concerned about it and show risk, which makes other people pile on, shorts pile on, other people sell. And then Alameda came out, the CEO, and she said, we'll buy all those tokens from you at $22.
Is that Caroline?
Yes.
Yeah.
By the way, I'd never heard of her until I saw her up on Twitter and I thought it was a child.
She's a young woman.
Yeah, but she looked very young and very
Yes,
inexperienced.
their team's pretty young, yeah.
Yeah, but for very inexperienced to be running that size of a book.
Yeah.
I mean,
Yes.
yeah, and saying some pretty crazy things.
So and that's another red flag when you go on Twitter and say, we'll buy it all at 22, because you could have done that privately.
Yeah.
If you want to do an OTC transaction, you can do that privately. To put it up publicly shows you're trying to build confidence. And that was kind of a major technical support level. There was kind of nothing but air below 22. So now that becomes a line in the sand. And once that, obviously the shorts pile on, once that broke through 22, started crashing, that's when it's all messed up now, because if, going back to that balance sheet, when your equities are entirely made up of these make-believe tokens with no real liquidity, if they go down, you're done.
That's
That's
like
what
your
happened.
McDonald's analogy that we
Yes.
spoke about
Yes.
at the conference.
Yes, and then you're insolvent, and then so that's the Ponzi part. But then when you actually, after obviously the post mortem, people are diving in. They're saying, okay, well, FTX had it back toward Alameda. They were, they're lending customer deposits to Alameda, and so FTX customers at risk. It's not just Alameda going down, and they basically showed how bad it all was. So there are a lot of people that knew it was bad, but basically it's as bad as you thought it might be, or were concerned it might be. It was worse than that. It was just outright worse.